when you think about this exuberance, just the last quarter alone, just the last couple of weeks of the year, Goldman itself came out swinging with a couple of mega deals. Where did they come from?
Look, the end of 23 was quite remarkable. You saw sectors such as energy, which was most noteworthy, come back with an unbelievable vibrance after what had been multiple years of being relatively quiet. Now, you saw alternative energy, renewable energy be quite active through that period, but this was classic upstream energy coming back in great force, and that really drove the fourth quarter.
But those were very large deals. You think Hess, Chevron, you think Pioneer, you think big deals out there, and the question is how many are left in energy alone?
It's interesting. We look at a lot of statistics, as you would imagine, and if you look at M&A as a percentage of GDP, which is a common statistic, it's been running 2 to 3, maybe 3 to 3.5% over the last year and a half. If you look back over 20 years or 25 years, it generally runs in the 5-ish% range. So we actually think there's a lot of GDP that has been pent-up demand, as we'll call it. We'll talk a little bit about private equity, I'm sure, as part of this conversation, who has been relatively inactive for probably almost 18 months since the middle of 2022. But when you think about what really drives future M&A, we think there's a lot of pent-up demand, and there's been large sectors, for instance, technology, where there has been relatively little consolidation over the last 12 or 18 months as well. So it'll ebb and flow, but there's a lot of large players who sat and watched, whether it be geopolitical, whether it be regulatory, who now are having what I'll call very active strategic conversations.
What does the pipeline look like now? It's interesting when I speak to you and your peers, everyone seems to have been very busy. It's almost like that winter break never happened. For a lot of people, I talked to a lot of people working out of Hawaii and other countries, even this week. What's the pipeline look like?
I wish it had been a little quieter over the holiday. I found it to be very active. I've probably spent every day on the phone. It's interesting, the pipeline of dialogue is as robust as we have seen. What the challenge has been is just getting the fingers to meet on transactions. And so when you think about coming out of COVID, the imperative, the strategic desire to get things done, to reposition companies hasn't changed. The desire of boards and, most importantly, the support from shareholders to strategically reposition companies hasn't changed whatsoever. Getting the fingers to meet on valuation, whether that's because of interest rate moves or other things which we'll talk about, has made getting deals done harder, but that dialogue continues. And now, as you've seen, and again, we're very balanced about it. Right? We're not in a robust M&A market yet. We're in what I'll call a recovering market. If 2021 was a 10, and 2022 first half was an 8, and 2023 was a 4, we're kind of in that 5 or 6 from my perspective. But you can feel the momentum and the dialogue remains. Now it's a question, will the fingers meet when you'll see what we saw in the fourth quarter, which is very robust activity.
What brings this year then from a 4 to an 8 once again? Is it the private equity industry or something else?
Look, if you look back over the last 5 years, private equity was between 38% of the M&A market. Technology, media, and telecom was between 30 and 40% of the M&A market. Both of those dropped dramatically. So what brings it from a 5 to an 8 is going to be a recovery in private equity activity, not just on new acquisitions, but monetizations. We think that there's multi-trillion dollars of portfolio companies sitting inside the private equity firms. That will take you in itself from a 4 to an 8 if we see private equity rebound.